If your e-commerce store made $100,000 last month, how much of that actually landed in your pocket as profit? If you can't answer that with confidence, you're not alone. Most e-commerce founders don't know because they treat profit like an afterthought. Today, I'm going to show you how to flip the script to guarantee you make profit every month, no matter what your sales look like. Here's the brutal truth. Most e-commerce businesses are either barely breaking even or losing money. That's because they treat profit as what's left over after paying bills and expenses. But expenses expand to fill whatever money you have, and profit disappears. You need a system that forces you to take profit first so expenses never steal it. The system requires something a lot of founders push back against after hearing it for the first time. It needs a separation of your revenue into multiple bank accounts, each with a clear purpose. You start with all your sales landing in your income account. Then, twice a month, you allocate that money into several accounts. Profit, owner's pay, aka your salary, tax, operating expenses, and for e-commerce, a critical sixth account called inventory reserve, or COGS, or whatever inventory term you want to call it. We'll call it COGS in this video. Why keep a whole entire bank account just for it? Because e-commerce businesses tie up a lot of cash in stock and inventory. Without setting aside money specifically for restocking, you'll get hit with cash crunches at the worst times, like peak season or when suppliers demand payment up front. This extra account is a lifesaver for managing your working capital wisely. Over time, you want to decrease the percentage of your revenue that goes towards inventory and operating expenses and increase the percentage of your revenue that goes to owner distributions, profit, and taxes. Here's each financial action you should take to improve your e-commerce business's financial health. First, open separate bank accounts for income, profit, owner's pay, tax, operating expenses, and inventory reserve. This separation is really the best way. You can just track these in a spreadsheet, but it won't have the same effect. Keeping all your money in one account creates a false sense of abundance and makes it easy to overspend. Separating money forces discipline, so you see exactly how much is profit, how much is taxes, and how much you can actually spend. Second, twice a month, transfer funds from your income to these accounts based on your allocation percentages. I have a whole video about those, and I'll link it in the description. Consistency is everything here. Third, spend only what's in your operating expenses account. If it's tight, cut costs. Don't touch profit or tax. Fourth, audit your expenses regularly. Stop wasting money on unnecessary apps, negotiate shipping, and use free tools where possible. Use AI when you can. You could save thousands a year just by optimizing software. 5. Gradually adjust your allocations towards your targets each quarter. Okay, so now that we know what to do, let's talk about some rookie errors. The first rookie error is ignoring inventory cost. When you don't reserve money for restocking, you're going to scramble for cash when it's time to buy more product, which can kill your momentum or force you into costly financing. The next mistake is confusing revenue with profit. Please do not celebrate revenue instead of profit. A six-figure month feels like a success until you look at cost of goods, ad spend, processing fees, and returns, and realize you actually netted like $4,000. If you don't know your contribution margin per order, you don't know whether scaling will make you rich or bankrupt. Another common mistake is not reserving enough for taxes. Founders also routinely forget that the cash sitting in their account isn't all theirs. Quarterly estimated taxes and sales tax obligations don't just go away because nobody's chasing you yet. The rookie move is spending it, and the disciplined move is sweeping 25 to 30% of profit into a tax account as soon as it hits. Finally, the ultimate mistake is keeping your head in the sand. It's the most expensive mistake to refuse to look at the numbers at all. Founders skip the dashboard for weeks because they're scared of what they'll see. Meanwhile, ad spend is turning to a negative ROAS, return rates are climbing, and the problem compounds in silence. Every week you don't look at it is a week that you can't fix it. Luckily, these mistakes aren't inevitable. By setting up a simple profit-first system, you can get your head out of the sand and avoid the cash flows that many e-commerce businesses run into. So if you want to stop guessing and start guaranteeing profit every month, try the system out. If you don't want to figure it out alone, I'm offering a free strategy audit for e-commerce founders. I'll review your cash flow, allocation percentages, and spending habits to create a customized plan that fits your business. You can find the link in the description below. And until then, I'll see you next time.